Hi, Matt McAleer, President, Director of Private Wealth, Cumberland Advisors, July 25th, right at the close this week. Quick review. Last week we did a pretty good deep dive into banks and what bank price action might be able to tell us about the market we're in today and the market that may be around the corner. And the fact that the bank's trading well, or in trading jargon, trading dry, is a positive for me. Doesn't have to be for everybody. It is for me. We went over a couple of different snapshots of past markets where banks foretold headaches by cracking and breaking down well ahead of the market. So we'll keep our eyes on those banks. Another good week for the banks, by the way, up about 1.5%. So some of that screeching that I discussed last week is getting louder, and will continue to get louder if the market continues to trade with a decent bid. And that screeching is not without some basis to it, right? An awful lot of people trade markets on what they think should be happening, based on headlines, based on politics, based on the Fed, based on a number of different jigsaw pieces to a puzzle. And they put together a mantra and feel that the market should follow their mantra. The market doesn't follow my mantra. The market doesn't follow anyone's mantra. The market is a summation of millions of inputs from investors and traders around the world. Price is the sum of supply and demand. So what we're seeing right now is continued demand for equities. How long that lasts, I don't know. But the market will tell us. The market doesn't tend to just fall out of bed and keep going down. It gives hints. It gives weakening breath. And we're seeing a little bit of that right now. It sees a number. We can see a number of different things in momentum, in advanced decliners. We're not seeing anything yet to get overly concerned. So we had a solid week in the portfolios. I want to address one stock in particular because I got a number of calls on it this week from clients, obviously. We sold GEV. That's GE Vernova. That was a spinoff from General Electric. Remember, they split into 3 different companies. GEV was their power company. We bought that last July 13th, 14th, for about $175, $180. It immediately dropped. It immediately dropped 8%. As the stock started to recover, the story started to catch on. We sold half the position 6 months later at $400. We sold the rest of the position this week, call it $620. And so clients were just asking why. They came out with earnings. Earnings were solid. I might have thought that they, in a couple areas, would have been a little bit better, but they were solid. In my mind, the stock had traded to a point where it was reflecting the good news of those earnings. Now, can the stock go higher? Absolutely. If the stock goes lower, can we rebuy it? Absolutely. But let me show you one reason we sold the stock. I mentioned earnings, so let's look at a second. I thought earnings were okay. Let's look at the second. This is a weekly momentum graph, and it's something I share with you verbally from time to time on different securities and indices, but I thought I'd do a quick dive on this. If you notice, GEV traded up to 140% plus of positive weekly momentum. Anything over 100, I start to get a little bit concerned about stocks being ahead of themselves. It's not a problem, it's not a negative, it's just a scenario of risk and reward. When we get through 125, I tend to be a seller of not an entire position, but a piece of a position. When we get through to 140, 150, that's a very rare occurrence. And by the way, that's tremendous momentum. That's a good thing. But it does force me to take more off the table, or in this case, take the entire piece off the table. Why? If we look at the volatility in GEV, I'm confident that if I would like to, I can add to this position at a more reasonable risk reward. Notice I don't say at a more reasonable price, at a more reasonable risk reward scenario. Could be 3 months from now, could be a year from now, but it's going to be somewhere that I'm not on the top of a spike higher. Remember, we bought this right. We bought this at $1.80. Let half go at 400 and the rest at 620 in 12 months. We'll take it. So I wanted to just put a little insight into what may cause the sale of a security that otherwise seems to be doing everything right. In an ideal world, we're buying great companies when they're down on that negative 100 weekly momentum spot. Again, great companies, great balance sheets, great trend characteristics that have a lapse in pricing. So if we can buy it minus 100 and sell it plus 100 on a weekly momentum, boy, we wouldn't have to be in this game too long. So anyway, that's a quick peek into a sale this week. We have Moose coming up talking bonds. Keep in mind, our main goal as money managers is to trade what's in front of us, make reasonable decisions on risk and reward. Moose, take it away.
Hi, it's John Musso. I'm the Chief Investment Officer at Cumberland Advisors. It is Friday morning, late morning on July 25th. This is the bond report. This week, pretty quiet, a doldrum week in the middle of the summer. Of course, headlines dominated again by President Trump, talking about tariffs, talking about Jay Powell. The movement tends to be a little less all the time that this gets talked about. We've talked about this before. The kind of volatility we saw last April when this was going on is not the volatility that we're seeing now. So the 10-year bond was fairly well behaved this week, really down a basis point from a 442 to a 441. But it was really only in about a 10 basis point range. It was a little lower earlier in the week. What pushed yields up from their lows earlier in the week? Well, more of the same. But by yesterday, he goes and he visits Jay Powell at the Federal Reserve. The last time that happened to be in 2006 when President George W. Bush went to see basically the swearing in of Ben Bernanke as the Fed chairman, which happened to be at the Federal Reserve Bank that day. That's the last time any president has visited the Federal Reserve Bank. So kind of unique in that sense. And, the Trump modus operandi here is very much kind of like tariffs. He throws it out and then reels it back in. And by the time he's walking out of the Fed yesterday, he's patting Jay Powell on the back and he's talking about, thinks Jay Powell will probably lower interest rates down the road. And the volatility of this talk seemed to die down a little bit. So, on one lesson there, it's always good to go see somebody as opposed to just doing it in the press. And I think things tend to soften a little bit there. So that was good. On the muni front, we saw yields come down this week on the long end. Overdue, we talked about it last week. So the AAA yield scale went down about 6 ticks to a 471 from a 477. 10 years and munis, which weren't off as much as the long bonds, as we talked about, they were pretty steady around 335 or so. But more importantly was treasuries were down somewhat, 4 ticks in the long end. Munis were down about 6 ticks in the long end. That tells you that munis are starting to make up some ground, and they've got a lot more ground to make up. And we talked about how cheap they were at long 5% plus yields on many issues. There is a strong calendar this week, so the opportunities will probably still be there for the most part. But at least we have some stability back in that market. Not a lot on the economic front this week at all. Jobless claims were a little less than expected. Next week, busier week. We have the FOMC meeting. We expect nothing to go on there. Business as usual. They will keep rates unchanged for now and pick it up again in September. And I think they were kind of hinting at that yesterday when Trump was at the Fed. He clearly wants rates to come down. You also have next week the jobs numbers. That will be next Friday. Very important. The estimate is about 100,000 jobs. It's way down from the 147,000 that were printed last month. So certainly expectations are down. We'll see whether last month was a blip or not. We hope everybody is really enjoying their summer so far, and we will talk to you next week. Thanks a lot.
Thanks, Moose. Always informative. See you next week.